everybody. Welcome back to Earnings Call. My name is Jeffrey Beamer. I am the Senior Investment Strategist over at ewotrader.com. And if you've seen our show for a while, you know we don't just talk about stocks and company earnings. We talk about how to profit from company earnings announcements, okay? So this week, the week of August 24th, brings several notable large cap reports, including technology, AI infrastructure, software, retail, and these all lead the earnings calendar. Now, the clear centerpiece this week is Nvidia, which announces on Wednesday. So as the market's primary AI bellwether, traders are going to be focused on data center demand, next-gen chip segments, margins, and an outlook for the hyperscaler spending, okay? That whole big picture. So outside of Nvidia, this week features a majority of large and mega cap stocks. And from an option perspective, okay, Intuit, Nvidia, Salesforce, CrowdStrike, Marvell, Autodesk, Workday, Kohl's, and Okta, those stocks should command the greatest attention this week, with the guidance and forward expectations likely to drive significant post-earnings moves, okay? So we're going to go over all of this. Plus, we're going to touch on last week's trade, and I got a new trade for you, and we're going to get started right now. Now, each and every week, we do talk about a whole slew of stocks. So there should be a kind of a chapter feature down at the bottom where you can just jump to a particular stock that you're interested in. And I'm going to do something a little different this week in our list. So you're going to want to stay tuned and find out the little modification that I've made that's going to make it hopefully a little bit more valuable to you about the information that's presented. So here on our list this week, we have our breakout stocks on the left. These stocks are stocks or companies that on average move greater than 10% through earnings. Okay, we're talking double-digit moves each and every earnings event. There's certain strategies that we like to trade around that, okay, including straddles, strangles, some verticals, okay? It varies a little bit. Now, on the right-hand side, we have our quiet list. And on this list, we look for stocks that are really announcing results the stock is moving, okay? Between 2 and about 8%, really anything under 10%. The no-go zone really is at 8 to 10%, 8 to 11% range for a couple of reasons, which I'll touch on in a little bit. But normally below 8% on average moves is really in our wheelhouse, okay? So those are quiet stocks, and we like to sell premium around these, like selling vertical spreads or combining vertical spreads together to create an iron condor, okay? Those are the things that we like to do for the quiet stocks because there's something in common that happens, and that is implied volatility rushes into these options right before earnings, and we like to take advantage of that in one way or another, all right? So let me give you an example of a quiet stock. We're going to start with that list this week. Okay, and this is McDonald's. Now, McDonald's had earnings earlier this month. They don't have earnings this week, but McDonald's is just a prime example of each and every quarter. It moves single digits, usually well under 5%. All right, so it is a consistent mover for us and one that we do like to trade on a regular basis. Okay, and let's take a look at our list this week because it starts right off with a stock that used to be on our breakout list, and that's PDD, but now it's on our quiet list. I'll talk about that when we get to the chart, but you can see the names here: Intuit, Dick's Sporting Goods, Zoom, Salesforce, Nvidia, of course, CrowdStrike, Affirm, Workday. These are names that are just really familiar to a lot of people. And let's go through the list, okay? And I'll show you what, hopefully I'm going to give you a little bit more information, a little bit of a peek underneath the sheet, so to speak, because normally I talk about the average move of a stock and I throw in what the expected move is, but I'm actually going to put it all together for you, or hopefully each and every week, but starting with this show here. So we have PDD now, Pinduoduo. Okay. Sounds Chinese. Their emblem is Chinese, but they're based in Dublin, Ireland. Go figure. Okay. Well, they announced this morning. Okay. They had earnings before market open today. And they had an expected move, meaning that's what option market makers are pricing into the options. Okay. We don't make up these. I don't make up these numbers. Okay. These are what the market makers are pricing into the move. There's a couple of different option pricing formulas that you can use, and you got to pick one. Okay. And so there's an industry standard. They use that formula to kind of calculate, hey, where do we think the stock is going to go? We don't know if it's going to go up or down, but it's going to move. And how much is it going to move? And that's what they're pricing in here. And then we can look back and see each and every earnings cycle what the average move is. So that's the data that you see here in my little box here. The expected move on Pinduoduo was 7.5% going into this morning. Okay. The average move here is around 8%. Yet the stock, as you can see, it's only down 1.53%. Okay. So for a stock that averages around 8%, that's right at the top of our window. This stock used to be a double-digit mover, like a consistent double-digit mover. Well, it's matured as a company. So now it's a little bit more quiet, getting into that range where we might start trading this for one of our quiet strategies. Okay. That average move number, of course, based upon where we closed today, if we closed right here down 1.5% on the stock, obviously that average move number is going to drop a little bit. Okay. So it's becoming a little bit more quiet. All right. Now, moving on through the list, we go to tomorrow morning, Tuesday, Bank of Montreal. Now, there's several Canadian banks. TD Ameritrade is announcing, or TD Bank is announcing this week. Scotiabank, Bank of Montreal. Okay, lots of Canadian banks. Just so you know, they're all quiet movers. All quiet movers. So here's an example of Bank of Montreal. I included this just because it's at a great price for our strategy at $172. The problem is these stocks normally don't have weekly options. So we have to go to the regular standard option, which is September 21st, and that's 3 weeks away. Okay. So I believe that's September expiration is on the 21st. Let me just double check here. Actually the 18th, sorry. So 1, 2, 3. Yep. The 18th. So it would be September 18th. That's why 3 weeks away. Okay. So, but as you can see here, the expected move is about 5.3%. And the average move on this thing is about 3%. So it looks like it took a big drop the other day. This is actually about a 3% move for the stock. Okay. But at $172, you can usually find a really nice trade on a quiet stock like this. Now, moving on, we have Dick's Sporting Goods. Now, Dick's is a little bit volatile, and it has been in a downtrend, as you can see here. And normally, I am not worried about the overall trend. I'm just worried about what it does in and around earnings. Okay? So you see here that what's notable here is that they declare on, well, let me double check because I have Thursday written on there, but I think it's Tuesday. Yep, it is Tuesday. So let me correct that because I like accurate data. All right. Tuesday. And that would be the 25th. All right. And before market open is correct. Okay. Notice the average move here is about 7%, but the expected move is about 11%. So what do you do when you see this kind of data? Notice here, last earnings cycle, look how quiet that was. Well within that 7% number. But now they're bidding up the implied volatility on DICS. And what do you do as a trader? Well, there's a couple things you can do. You can change your strategy to kind of fit maybe your prognosis, or what I like to do, honestly, is I like to just monitor this. I won't trade DICS this cycle. I will just kind of monitor. We've traded DICS quite a bit, but because they're bidding up, expecting about a 12% move. Now, normally you would think, oh, well, that's a great opportunity. I'm going to try to do a straddle or strangle. Well, if you do that, you're paying for a move of 12%, but its average move is only 7. What happens if the stock only moves 9%? Well, then you're guaranteeing yourself a loss. Okay. So it's all about creating an edge. And that's what we're kind of working towards here. All right. Now, moving down our list, Intuit, they're going to announce tomorrow after market close. They have an average move of 8%, but the expected move right now is about 9%. So given that it is in the tech space, I would be a little bit leery of kind of working with Intuit based upon some of the strategies that we do here. Okay. A little bit too volatile although this is a $370 stock, we might be able to get option pricing way out of the money. The problem is right now we're in this AI super cycle kind of atmosphere where any company, especially the tech-oriented companies, can be very sensitive to AI and now more on the AI expenses and cutting back or different strategies that they're trying to deploy with AI. So we will avoid that. We will watch Intuit. There are better opportunities out there, and we'll just kind of monitor this as the stock has actually recovered nicely, rallying up to $370 right now, has an expected move of around 9%. So we'll keep an eye on that. Now, Zoom, this used to be a historic mover. I mean, this thing used to move around a lot. Notice here that the average move here is about 10%, but the expected move is 8.6%. All right. That's what the options are pricing in right now, is only an 8.6% move. So why would this appear on my quiet list? Well, because like I said, this once used to be a consistent double-digit mover. We're talking 13, 15, 18% through the earnings events. It's quieting down quite a bit, and stocks will do this when their products become commoditized or they become kind of they're not cutting edge anymore. They're more ho-hum. Obviously the standard acronym for video conferencing these days is Zoom. We're going to do a Zoom meeting, even though you can do a Google meeting, a meeting on Google, or you can do a Microsoft Teams meeting. Okay. People still refer to it as the Zoom meeting. Okay. So that is where they really built their name brand recognition. But this thing is in the process of getting a little quieter. So again, another stock on our list, but we're watching it because it's getting down there in that kind of crazy area here where option pricing is really going to sway, making it either a quiet stock or a breakout stock. Okay. And, just we'll just kind of keep an eye on it. Moving on, CrowdStrike. All right. They will have earnings on Wednesday, August 26th, after market close. The expected move here is just 7.8%. Now, that is an increase over the average move of 4%. Now, with a stock priced at $190, okay, we can account for this, okay? But again, it's in that tech space. So, for right now, I think it's only prudent. There's really one tech stock, which we're going to get to in just a second, that's a consistent quiet mover that we probably should trade, but we don't. We're just waiting for that one big move to get out of the way. Okay. Well, CrowdStrike is kind of in that space. All right. So even though it has an average move of 4%, we're just kind of avoiding it right now because again, all it takes is one report of changing the it's not necessarily what they report, it's the outlook. The outlook, it has been the thing that has really been moving stocks lately, either moving stocks beyond their normal moves or less than their normal moves, all in because of the outlook, the forward guidance. Okay, that's it. Now here we go. This is the one. Nvidia, they will announce Wednesday after market close. Here's the expected move. It is 6%. 5.9% is the expected move for Nvidia. The average move, can you believe this? It's only 3% for Nvidia. And this is over many different earnings cycles. Okay. We don't just take the last earnings cycle. We're going back in time and doing the calculations of how the stock moves. This is a consistent, quiet mover, and we should be trading it. If you traded the math, you would be trading Nvidia. You would actually be selling premium on Nvidia for this earnings cycle. However, there's all sorts of news that can really drive this stock either higher by 10% or 12% that would blow through your earnings between your break evens, and we don't want that. Okay, so we're just kind of like I said, there's other opportunities here that are just as good, even better, without the AI interference. Okay, but watch out for Nvidia, as everybody will, and just see how the stock moves after the earnings event. Now, Salesforce, again, another one that used to be on our breakout list. Now it's on our quiet list. The expected move here is under 8%. Okay, it's coming in at 7.8%. And look at this, the average move for Salesforce is just 4%. So again, they're thinking a little bit more volatility. Again, this is software, and software is affected by AI, especially Salesforce. It's really gotten, beaten up here recently. It's trying to rally a little bit. As you can see, it looks like my earnings indicator missed an earnings or two here. But you can see this stock is, used to be kind of way up here, $400 roughly, well, high 300s, and has really come off those, and now got down to 150, literally got cut in half. All right, more than that. And then found some bidders here, and people are bidding up the stock, and it's in a nice trend right now. Crossing, but look at this. We have the golden cross. Now, my moving averages that you see here, they're not your typical moving average that you hear about on with the talking heads. I use there's only one other trader until I started teaching this in classes. Okay. There was only one other notable trader who's still on TV today. Okay. That uses these two moving averages. He and I talked about this at a conference. Okay. One day. All right. My moving averages here, my short-term moving average is a 21 period. Okay. That's the orange line. The gold line here is a 161, not a 150. Okay. Not a 50, not a 150. It's a 161 period moving average. And there's a reason for that. Okay. And look at this. We have the golden cross, where your short-term moving average crosses above or crosses below, but here it's crossing above the long-term trend. Okay. The long-term moving average. And that just occurred, a couple days ago. Okay. Really, Friday was the day that we got the official cross. And so, that's still a little bullish indicator there. Anyway, expected move 7%, just under 8%. Average move 4%. Now, Autodesk. Same kind of thing, off its lows, catching a little bit of a bid. We have the cross here that you see. They will announce on Thursday, August 27th, after market close. Average move on this stock is just about 5%, but they're bidding this up a little bit, up to 8.7%. A lot of these tech stocks that were once pretty quiet are now starting to get a little bit more volatile. Why? Because of AI. Okay. Till this AI topic goes away, which it will someday. Yes, it will, just like .com did, just like every other cycle did. Okay, we'll get on to another cycle of some sort. All right. And AI will be a standardized type of thing. All right. Now, so that's Autodesk. Now, let's continue to move through. We just got a couple of more quiet stocks to go here. Affirm, they will announce on Thursday after market close. The average move here on Affirm is 7%, and the expected move is 11. So, again, the average move for Affirm has really kind of gone from a breakout stock to a quiet stock. And it's been in this transition for some time now where it cycles. And this is evidence right here of that cycle. Like it's starting to get a little bit more volatile. Market makers are pricing in bigger moves for the stock. And we just want the stock to confirm that, yes, it's going to be moving quite a bit because of blah, blah, blah. And we know this because of guidance. Okay. We can hear it in the guidance. And when we get consistent messages from the CEO or company executives, we then know what to expect. Okay. And I have another good example of that here just shortly. So we'll talk about it when we get to the trades. Okay. Now, Workday is our final quiet stock for the week. They will announce Thursday after market close. The average move here is about 6%, just under 6. It's 5 and change. The expected move is 7.5%. Okay, that's where the options are pricing in a little bit more of a move. This is a $200 stock, so definitely one that we'll be watching here and probably trading this in a day or two, depending on what option pricing does. Okay, so that's our quiet list. All right, and there's some really interesting characters in there. Wouldn't you agree? Okay, so now let's get to the breakout list. And again, these are stocks that are just consistent movers, and they move double digits every quarter consistently. Okay. So let me give you an example of a volatile breakout stock. This is Akamai. Now, Akamai already had earnings this cycle. In fact, it didn't move as much as the market makers thought, which was interesting. But notice all the others, this thing moves. This thing is a consistent double digit mover. All right. And that's a stock that I do like to trade or try to trade. Okay. And try meaning if the pricing is there, I'm going to trade it. It's all about the pricing. Okay. So, but it's a double digit mover. Let's take a look at our list for this week. Okay. Interesting stock that we started off today is Napco Security, NSSC. You probably never heard of it, but this thing has had a wild day. We'll take a look at that in just a second. But you can see that we have Semtech, Kohl's, Okta, Dollar Tree, Dollar General. We're going to talk about Dollar Tree and Dollar General here in just a moment, and Marvell, all on our breakout list. Let's get to the charts and let's start with this wild day for Napco Security. Now, my little vertical line, here, let me move my dotted line here because I want you to see the wick on this thing. Okay, this stock right now is up 5%. Now, you can see here, this thing declared this morning. Okay, they had an expected move of 13%. So I want you to keep that in mind. Expected move of 13%. The average move here is 11%. So when you get a consistent mover, I like these odds here. Well, I like to price it out because if I can get a little cheaper and get a big move, well, this was one of them. If this had earnings later in the week, I probably would have traded this. But coming out of a weekend where you have theta decay over the weekend and all that, I don't like trading breakout stocks on a Monday. But look at this thing. Okay, this wick. Okay, the high of the day here is 51.77. Okay, this stock closed yesterday at 38.09. This thing gapped up higher to 46.18 on the open, traded up to 51.77 before selling off. That was a 35% move during the morning that it ran up, hit that high, and then it started to sell off. Remember my 161 moving average? Look where the stock is trading. Okay. I wonder why. Why do you use the 161? Trust me, it's a good one. Okay. So look at this. It's come all the way back down. Stock's up 5%. So technically, if it closes here, it won't have moved its expected move. It would have been quieter. But my question is, could you have stayed in the trade? If you had traded this, would you have gotten out? Well, on a breakout stock, we probably would have. The minute we saw that pullback starting, we probably would have exited this for a nice winner. However, if you held on, then you're running into problems. And if you had sold premium, did you have the guts to stay with it? I mean, there's all sorts of questions on a move like this. But that's why it's on our breakout list. They are a lot of fun to watch, okay? A lot of fun to watch and or to be involved in, like with our a trade from 2 weeks ago. We did a strangle on a stock that had a over 100% return, almost 130% return in just 2 days, okay? So that's why we like to trade them. All right, moving on through our list, we have Semtech. They will announce tomorrow after market close. The expected move here is 21%. Now, the average move is 9. Now, automatically, you would think, oh, this is perfect. I'm going to buy a straddle or strangle on this because the average move is 9 and they're expecting a move of 21%. Well, that's the problem. Market makers have already beat you to the punch. They've already priced in a bigger potential move for the stock, and it's a $118 stock, which gets a little expensive, especially when they start bidding up the straddle prices. Okay. So, what normally might be around a $1,100 trade. Let's see here if I can get, let's see if I have, look at this. We would have to go out to September too. Well, they got, September, and at 118, probably have to do. So I can tell you right now, you're looking at $2,300 for a straddle or strangle on a $100 stock. They have priced in a bigger move for this stock for tomorrow. It's down 4.4% today. We'll see after market close what happens to Semtech. Definitely one you'll want to watch. Okay. Now, what's a little bit more reasonable is Kohl's. Now, Kohl's will have announcement on Wednesday before market open. The expected move here is 13%. The average move is 22%. This I kind of like because they're expecting a little quieter move than normal. However, the average is 22%. The numbers dictate we have an edge here. Again, what was the earnings call last time? Well, guess what? You can go to May 29th or 28th, okay? You can go on the company's website, on many different platforms for free, and go back and listen to the earnings call last time and what the CEO said about his forecast for the upcoming quarters, okay? And help make your decision on your trade. How about that? Okay. And a lot of people, don't want to go through the trouble. I understand that. But again, when you're trading, it's all about gaining an edge and putting odds and probabilities on your side. That's kind of key. Now, one that didn't make our list for just no other reason than we had some great other candidates is Abercrombie and Fitch. And probably should have put that on there. This one is just really a good, consistent mover. It moves double digits around 12, 13%, sometimes more, sometimes less. All right. So you got to get into the rhythm of the stock and how it trades. Okay. Like, Look at these past two earnings events back here. Look at this, nice little drop, nice pop. That's the Abercrombie and Fitch that I know and like trading. This last one right here didn't really do the deal. And not only that, it gapped up and then reversed. That's horrible for a straddle or strangle. But once you get those out of the way, then you can look for a good trade here on possibly Abercrombie and Fitch. Okay, another good retailer there. Going through our list, Okta, they will announce Wednesday after market close. The expected move here is close to 13%. The average move is 11, indicating there might be a little bit of an edge there. Again, option pricing would dictate if you would trade this, and are you expecting a bigger move than normal because of maybe the sector that it's in or how stocks related to this company, meaning they're in the same sector, same industry. How are they trading? How are they going through earnings? All of this adds up to an opportunity or something to avoid. Okay. Now, let's get into a couple of big retailers here, Dollar Tree and Dollar General. Now, Dollar Tree is going to announce on Thursday before market open. And this is right there. This is a stock that's right there in that no man's land. The expected move is just over 10%. It's 10.5% as of this morning. And the average move is 10%. So market makers, again, they're like the Las Vegas bookies a little bit. They are really good. They are really good at getting this right. Okay. And right is not like to the penny right. Right is within a bracket of an error. Trying to think of the word I'm looking for, but anyway, there's a range. Okay, if they're off by 1% or 2, that still counts. Okay, because again, what it takes to make money or not in these trades is, sometimes it's pretty narrow, and when you get something that moves really beyond 2% or more than the expected move, that's where the real money starts being made. So just kind of keep that in mind. Okay. But Dollar General really should have been on my quiet list. Okay. Because it announces Thursday before market open, and its average and expected move is right around 8%. But I wanted to talk about these together because as you can see, the volatility on these is picking up a bit. Okay. Normally, what I look at is these intraday moves, highs and lows, and how is the stock normally moving, and then how does it move through earnings? Okay, and right now you can see that the daily intraday moves are starting to get a little bit bigger. Okay, more consistently. Yes, you do have your quiet periods, but again, once we get up to that 8, 9, 10, maybe even 11% numbers, that's really in the range of no man's land. And you really have to start trading almost directionally. Like, is it going to move higher? Is it going to move lower? That sort of thing. So keep that in mind. But we're going to watch both Dollar Tree and Dollar General this week. Okay. And then lastly, we do have Marvell Technology. Okay. Marvel Technology. We won't call it Marvell. We'll call it Marvel. Or you can call it Marvell. Whatever floats your boat. They will announce on Thursday after market close. And the expected move here is less than the average move. Okay. Expected move is about 10.7%. Average move is 12. Well, again, looking at how the stock behaves in and around earnings, see this gap here? That was not earnings last time. Okay. That was, as you see, 4 days after earnings last time is when the stock gapped up, had all this volatility in it. But when you go back in time, you see this move back here, this move that just doesn't look like it did anything. That's over a 14% move in the stock. Okay. Right there, because it was trading at, let's scale it. Okay. It's all about scaling. Okay. So you see here, that stock literally went from 75.68 and closed the next day up nicely at 89.57. Okay. So big gapper. So this stock can move around, and I'm seeing its volatility pick up. The intraday moves a little bit or a little bit more pronounced now. So definitely one to watch and see if it comes on your radar. So buried within this list, okay, between quiet stocks and breakout stocks, there's probably 3 or 4 really good trades. Okay. And we do these trades each and every week on Earnings Club. And actually, starting this week, we actually have a 4-week class that's beginning on trading earnings. All right. We will include a link below the video about that class, and it's something that is going to be recorded. So if you miss a day or something, you can go back and learn about the tools and everything that we're doing to create these, the edge for our trades. All right. And that class starts Wednesday. Otherwise, you can subscribe to Earnings Club and you'll get a trade a week. And we talk about that each and every week. So that's what we're going to get into now is talk about our trade of the week. So let's take a look at our list one last time, and you can kind of see where your eyes might want to go. And really, it's about these retailers: Kohl's, Dollar Tree, Dollar General, Abercrombie and Fitch, okay, and about tech, Nvidia, Salesforce, CrowdStrike, Intuit, okay. Oh, retailer Dick. So retail and technology this week. Big focus on large and mega cap stocks in that space. All right. So let's get to the trades. Last week, we talked about Walmart. Now, Walmart is a stock that we did not have a good trade on Walmart last earnings cycle. And I put it in as our trade of the week last week, but that's not what I sent out to our Earnings Club clients. And the reason for that is that going in, looking at the trade, right as I was analyzing it, ready to publish it, I noticed pricing was shifting, and those estimated moves now were getting even bigger for Walmart. Okay. They don't happen overnight. It's a process where the estimated move gets calculated and recalculated and recalculated. And I just wasn't liking what I was seeing. So I put out a trade on Lowe's. All right. Home Depot had already had their earnings announcement, didn't move. That was a good proxy for Lowe's. So I wanted to sell premium around Lowe's, do an iron condor. This is our published trade for Earnings Club. We avoided Walmart. And if you didn't see, Walmart moved over 10%, okay, violating its estimated and average move both. Again, for the second quarter in a row, it did this. So Walmart might be on our breakout list here pretty soon, but we did Lowe's. And how did this trade do? Well, it performed exactly as we wanted it to. Okay, the stock really didn't move, and it came down and moved, just slightly, but it ended up. We sold the Iron Condor for $1.26. We were allowed because of the non-movement in the stock. As you can see, it was just sat right in the middle of our Iron Condor. This generated we got to keep the entire profit because we let both verticals, the bear call spread on top, the bull put spread on the bottom, both done at a credit. We could let them expire worthless. Okay. No commissions for exiting the trade. We got to keep the whole thing. So $126 a spread. Now that may not sound like much, but let's put it in perspective. Not only was that a 33.6% return on risk in 3 days. Okay. 36% return on risk in 3 days. Nobody would snub their nose at that. It was a 1.29% return on portfolio. See, we average a $10,000 trading account is what we're looking at. That's why we only traded in our case study. We only traded. In this case, we did 2 contracts. Okay, so the debit was around 61 cents or 60 cents, somewhere around the 62 cents, 63 cents. Okay. And that is where we then did it 2 times. And that's how we generated a 1.26% return on portfolio in just 3 days. Okay. So we do love trading iron condors, but we do love our straddles and strangles as well. So what do I have for you this week? Well, the trade of this week is going to that retail space, and we're going to look at Kohl's. Okay. Because I noticed something very interesting on Kohl's that if you went out in time a little bit, okay, beyond the near month expiration, option pricing was much, which it normally is. It was greatly reduced. Okay. So I'm going to give us more time to be right by going a little further out in time and just letting the stock move around. So if we can gap up or down to our upper or lower break even and we get some follow through for that, then this can be a very nice little profitable trade. Or it could move more because right now it's pricing in at about a 13% move. And this thing can move 20% easy. It's done it many times before. Okay. So Kohl's is our trade of the week. Come back next Monday and we'll go over Kohl's. We'll go over the new opportunity next week, as well as the whole entire list for the next week in earnings. You don't want to miss it. So be sure to subscribe to the channel because we go through this each and every Monday right here on Earnings Call. So everyone have a great trading week, and I'll talk to you again soon. Take care.